Hello and welcome everyone to today's session. My name is Shanti and I will be your host in this live session for the US Open. Today's session is going to be 30 minutes and we will be talking about the main fundamentals that happened in past week, the main movement that happened, and also we'll be giving you a heads up of what's going to come for this week. Just before we do that, we have this risk disclaimer. Please note that whatever information that we provide are only for educational purposes. We ask you guys to seek out and search for the investment decisions that you want to do research and do your own technical analysis before making any investment decision. Always apply a risk management tool such as the stop loss and take profit levels in order to manage your portfolio as much as possible. Just going, let's talk about what happened in the markets today, just before the US session and also during the US session. So the stocks market in Europe and the US have rebounded from severe losses that were posted yesterday. I'm going to show you that on the MT4. I'm going to show you exactly what happened for the Dow Jones index, and you can see you will see that the Dow Jones fell to almost 14-month low. However, it kind of rebounded up to the upside. We were seeing some bullish candles over there. Also, industrial metals such as silver and copper, platinum have rebounded from yesterday's declines. So bargain hunters have stepped into the fold. We have the US dollar kind of muted today during the US session ahead of the CPI for the inflation numbers tomorrow from the US. However, we saw a little of a volatile session yesterday. You can see that from both euro dollar and the pound dollar pairs basically, and they are literally trading within a small ranges, waiting, as I said, for two things: for the Federal Reserve members, speeches such as Waller and Mr. And later on tomorrow, we will see also prices could actually move a little bit in a more volatile way after the CPI numbers. So let's start from the technical perspective here. So starting with the Dow Jones, and before going to any of the technicals, so how will the Fed speakers today will affect the market? So this week we saw that we saw a Fed speaker actually talk about the current monetary policy. So Fed speakers will definitely go disseminate or explain the latest views of the Federal Reserve. So each one of these officials has a chance to share their thoughts on the monetary policy. We saw it from Birkin last week, and he did say 75 basis points increase to the current interest rate. And he brought it back to the table, stressing that he wants to raise interest rates as quickly as possible to tackle inflation. Others at the Fed, such as Mr. will definitely talk about the interest rates hiking, and they probably might actually adopt a more hawkish outlook in the coming days. So the main thing to watch after these speeches is the CPI report. So if the CPI numbers, after a hawkish view, if the CPI numbers came lower than expected tomorrow, you could see Wall Street numbers from the Dow Jones and even the S&P 500 and even UT 100 indices. You might see them pull higher towards the levels of 33,126, which is the moving average over here. So this is confirmed from both the RSI and also the MACD. We are seeing here at the 4-hour chart, we are seeing the Dow Jones is currently standing at 32,592. Both the indicators are pointing to the upside. Why is that? Because we are seeing a bullish reversal, so a bullish crossover reversal. However, still be in the negative territory, which indicates that this major pullback or major downtrend that happened could have ended, and we might see a more movement to the upside. That's why we need the RSI to continue its bullish momentum to the upside, but still below the overbought territory. That's why we're waiting for prices to defeat the 33,126 to confirm that this reversal is not just a take profit level for our take profit positions from this downtrend that happened, but rather a new uptrend to continue. So a defeat of the 33,126 could actually path the way to the 34,000 mark and to this latest high. A defeat of this level, we could see prices all the way to the levels of 35,500 mark, which is the long-term view, or the short, or let's say medium term. From a lower perspective or lower time frame, so this is the moving average that I was talking about. The moment prices reach that area, it confirms that we are seeing prices could go all the way up here and then a continuation to the upside. So this area is very crucial, because once prices reach that, that means moving averages will be below the prices. You could see that the MACD and both the RSI pointing to the upside, which could confirm our let's say direction in the coming days. So having in mind defeating this level is very crucial, because this area, which represents this number, is definitely a volatile area where prices actually, we can say it's very pivotal. So prices were definitely moving in this area a lot, and we saw once it defeated this area, we saw prices hike to the upside. Similar story once this area also got defeated, we saw prices went down. So this is a very pivotal area for traders. So we could see prices bounce here, reach this area, and from there we could tell if prices could continue to the downside or continue to the upside. So if prices after the CPI numbers reach this area, we could tell how far the uptrend could continue, or we could see a continuation to the downside. So from the downside, if prices went all the way here and bounced back again, they need to defeat the 32,000 mark. A defeat of this level, this could clear the path for more support levels to the downside, like 31,500 mark. So be careful, traders, about this number. It's very pivotal, and from there we can tell exactly where prices could continue. Now let's talk about the forex game and talk about the US dollar. Let's take the euro dollar, for instance. And let's talk about what's going to happen in the FX, or what's happening in the forex arena. So the dollar index is literally falling near its opening levels of the daily levels. You can see that with the euro dollar. We saw the euro dollar actually rise during this session. You can see these three candles, 1, 2, 3, almost risen there, but however, it continues to trade within a narrow range. So this is because of the muted US dollar. The US dollar reached almost yearly highs near the 104 mark, which is very crucial for traders, because a lot of traders are seeking the US dollar because of fears from possible recessions in the US, fears of the latest lockdowns from China, fears of the the Russian and Ukrainian war. All of these factors are actually making the US dollar more attractive. Even though if you look at the gold, for instance, a lot of traders seek gold whenever there is some fears in the market. However, what's happening is that because of interest rates being pushed higher, the bond yields are gaining momentum, and we're seeing bond yields are going higher and higher. That's making a lot of demand on the US dollar in order to buy these bonds. That's why we're seeing a lot of demand on the US dollar. However, this dollar got muted today. So we're seeing this phenomenon that's actually affecting the euro dollar pair. You can see prices are standing still near the 1.0544. So what do we do next? What's next for us traders? So prices must go all the way above the 1.0643 to confirm the bullish setup, or they must defeat the levels of 1.05. So a defeat of 1.05 is required to confirm a continuation to the downside. Talking about the long-term view, now let's go to the short-term view. So the short-term view, you can see this narrow range over here, this range that's happening. So it starts from here, from this latest highs, and from this latest lows over here. So this is the narrow range what I'm talking about. So this range, there are different resistance levels So we can take this level, for instance, the 1.0592 and the 1.05. So if price is defeated either of these two, from the top side there is this high to play as an immediate resistance. If it got defeated, we could see prices all the way back to the 1.07. However, I'm more bullish on the US dollar compared to the euro because of the bond yield differences. So I would rather be more bearish in general against the euro dollar pair. So I would definitely try to find as more selling points rather than buying opportunities. So whenever prices go a little bit higher, I wouldn't take a trade from this area, but I'd rather wait for prices. If it goes up, I would rather take a sell from this area. So if prices, let's assume prices went all the way here, I wouldn't take a bullish trade just yet. I would wait for this level to be defeated. If it got defeated, maybe I might take a bullish trade. However, if prices went here and then went back again down, that's my signal to enter this range and aim for the 1.05. However, I wouldn't take a sell trade from this area unless I see more closing candles below this support line. Especially if you look at the RSI, you can see a lot of highs and then a lot of lows happening. So it's more biased to the downside, especially also with the MACD. There is a crossover that happened here, and we're seeing prices going almost to the negative territory. If you look at the 4-hour chart MACD, you could see there were many crosses happening, especially near the zero area, which confirms that there is a narrow range happening. So this is for the euro dollar. Talking about the sterling in general, so the sterling is holding steady on today's session, right? It's holding steady on Tuesday. So especially after plunging to its lowest level in nearly 2 years, on signals that the Bank of England will be forced to slow its interest rates hiking cycle as a result of the weaker economy. So what's happening is that since the Federal Reserve is literally trying to push interest rates higher and higher, and this will be confirmed today by the Federal Reserve speakers. If they adopt a really strong hawkish views, these views are bullish for the US dollars. And since we are seeing or hearing that the Bank of England will be forced to slow down its interest rate hiking cycle, or slowing down a little bit of their hawkish move or hawkish views a little bit, that could affect badly on the pound dollar pair. So from a technical perspective, I'm more bearish on the pound dollar compared to the euro dollar. So the euro dollar is more of a range trading. However, the pound are more bearish, especially also if you follow deeply the UK political news. You could tell that there is a local elections where the Labour force or the Labour Party won the London district. This is not really good for Boris Johnson because he is almost losing his popularity over there. And whenever there is a new views on who's gonna be elected later on in the UK elections, or the prime minister later on, whenever there is a different views of what to expect of let's say we're expecting that the Boris Johnson could actually stay as a prime minister. However, when there is different views before the election happening, this is not really good for the local currency. That's why we're seeing some bearish movement, but still in a narrow range. This narrow range is affected by the dollar itself. So the pound is literally controlled by the dollar at the moment. So whenever there is a muted move from the US dollar, that means there is a muted move in the pound dollar. However, whenever the dollar goes higher, we could see the pound dollar pair is going down. So I'm more biased to the downside, especially because from a technical perspective, you could tell that prices are standing below moving averages. MACD is still in the negative territory, even though we're seeing this crossover happening over here. This crossover confirms that prices, that the downside has stopped. Basically, it doesn't mean that prices could continue to the upside. We need the MACD to go above the zero territory in order to confirm that, yeah, prices will go higher. So what is my main levels to look at? So let's start with the moving averages. The moving averages, it's at 1.2459 or 1.2460. At the feet of this level, that means a full confirmation that this downtrend has finished. A more move to the upside above these highs and above this moving average, the second moving average, which is at the levels of 1.26, may give us a clear signal to go long, for instance. However, I'm more biased to the downside. Remember that. So if prices went above the 1.26, that means maybe we could see a new range happening. So this level is to confirm a new range trading happening. Now, if prices reached the 1.2459 and then went back, that could be another signal to the downside, a continuation to the downside. Let's have a look at the 1 hour chart. So at the 1 hour chart, you could see this range that we were talking about, okay? However, prices are still tilted to the downside. Still tilted to the downside, especially the MACD is near the negative territory. We saw a crossover to the downside happening before 4 hours or even 5 hours. And if you look at during the US session, we're seeing this 3 candles over here confirming that there is a muted move in the US dollar, confirming what we explained on the euro dollar in general. So prices must go all the way below the 1.2272 in order to confirm the downtrend. So from the top side at the feet of the 1.2460 is required to end the current bearish bias. And at the feet of the 2660, that could lead for a new possible uptrend or a new, let's say, new range in general. Talking about the dollar yen, continuing to talk about the dollar yen. So if you look at the dollar yen in particular, okay, so you can see that it is still below the latest highs of 131.24. So let me put the highest level that happened for the dollar yen. So the dollar yen, so this is the high, the latest high that happened, okay? So 131.38, okay, or let's say 131.40, okay, that's the latest high that happened. You can tell that because the moving averages are pointing to the upside, it confirms that prices are trading within a bullish setup, confirming what's happening with the euro, with the dollar in general. So this latest bearish candles that happened, all right, confirms the mutation of the US dollar. So this latest crossover to the downside means that prices could go down a little bit, try to test these moving averages at the levels of 128.86. That's the level that we need to see to be defeated in order to say, yeah, the uptrend has finished. This uptrend, you can link it from over here with a trend line. You can see if prices went all the way below the 128.86 or 129 in general, we can say that, yeah, prices of this pair will start to go down, or at least to range. As long as prices are above this level, that means the bullish side remains, especially if you look at the RSI now, it's kind of pointing to the upside, even though it's near the 50 area, but still it is tilted to the upside. That explains that we could see a more hawkish move. What's the main resistance? The latest highs, which is 131.38 or 0.40. At the feet of this level, we could see prices all the way to the 132 mark. Let's talk about the precious metal now. So you can see the precious metal over here. The prices are currently standing near the 1860 or 1851, between these two levels, tilted to the downside because of the US dollar strong movement. However, because we saw the US dollar being slowing down today, we saw this low over here, 1851, being as a support level. So this is the support level that a lot of traders are trying to use as an entry point, because many traders use precious metal as a range trading rather than trend trading. So how can I know if there is a range trading in gold or whether there is a trend trading? It depends on what kind of time frame that you are using. So if I'm using the 4-hour chart, it's clearly stating that there is a downtrend happening, especially that prices are below moving averages. MACD is pointing to the downside. Also, the RSI is tilted to the downside, just below the 50 mark. So that means prices are continuing its downside. However, we have a strong support level. So at the feet of the 1850 mark is required to confirm the downtrend. So this downtrend could finish if prices retrace back again to the upside. What's the main level to look for? This level, this moving average over here, the 1867. A defeat of the 1867, that's the first target for bullish traders. A defeat of that level, it could clear the path to these two levels, which is the 1893 or 1890 in general. Why is it important? Because it represents the trend line and another moving average. Also, it could clear the path to the 1910, which is the major support resistance level that a lot of traders will seek out. So when will we know if prices could reach this level? It depends on the CPI numbers. A high number of a CPI could boost the precious metal higher. Why? Higher inflation means that the current interest rate hikes that are happening from the US dollar are not enough, which could lead for fears that there is a chance, a high probability that there could be a recession happening, or that the US might enter a recession. This could prompt gold to go all the way higher and higher, and even to the levels of 2000. So be wary from tomorrow's CPI numbers. So the CPI numbers will be very crucial for traders tomorrow. If CPI numbers came lower and lower and lower, this definitely will boost the stocks and make traders to drop gold and even drop the US dollar and seek stocks in general. So we could see prices all the way down below the 1851, and a defeat of the 1851 could clear the path for even more bearish downsides, so to the levels of the 1800s. So tomorrow's numbers are very crucial for traders. So let's have a look from a smaller time frame. So currently we are seeing prices are trading within a narrow range at the moment between the 1960 and the 1860 and 1851, waiting for the CPI numbers. However, this low must be defeated in order to confirm the bearish downtrend. However, if prices went above the 1867, we could see prices all the way to the 1892. So you can take a trade from this area for a bullish momentum, and you can trade below this level a bearish momentum. Or if you are range trading, if prices reach the 1850 and we saw a bullish candle later on, that could be your entry point for buy, however, aiming for the 1867 only. So never, especially if you're trading within a range, so you would try to aim for $3-4 and get out, $3-4 and get out. However, you need to be wary of these levels. These levels are very crucial, which are the 1850 and the 1867, and then next the 1892. So whenever prices reach these levels, be sure that we could see a lot of movement happening from there. So this is it for today's session. I want to say thank you all for joining this channel and seeing this live session. Please be tuned for more videos coming this week. If you have any question or any inquiries, please send us to our client support channel at the FXBeza website. And also, thank you so much for joining us today. Have a good night and enjoy your evening. Thank you.